The following is a presentation of TFNN. The Power Trading Hour with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another excellent edition of the Power Trading Hour with me, your humble, lovable, squeezably soft host, as once more we go into the breach, dear friends.
The following takes place between 2 p.m. and 3 p.m.
We're up 3 on the S&P cash. Dow's down 57. We did go over that 25,000 mark earlier in the day. NASDAQ's up 10, although it was up a great deal more. This is the end of pretty much options rollover. After the options market moves, they need to kind of push the market up, then maybe push the market down a little bit. Then it's over. And what do we get? Well, I'm going to say probably around noon to 1 o'clock tomorrow, we're going to start seeing the movers and shakers leave New York City, the Manhattan district, and head out to the Hamptons where they all have their summer homes. And they'll be spending hours and hours in traffic. Apparently it takes 6 hours to get there on Friday. So it seems like every year, they just leave a day earlier, and they all decide to do the same thing, so the traffic's the same. But it's grown into what used to be light volume Friday afternoon to light volume on Thursday to light volume on Wednesday. You know, for all I know, it will be light volume today, and they'll be leaving tonight. So you just got to know that light volume is one of those things that happens into the 3-day weekend. Everybody's worked very hard in the spring. They're now ready to go spend their ill-gotten gains out there in the Hamptons and impress each other. And part of that is the oldest saying on Wall Street, and that is, do not be short a quiet market. There's nothing worse than being short with low volume, almost always. And there may be 1 out of 10 times that works. Most of the time what happens is everybody kind of squares off. It's a tug of war, and maybe there's just a tug of war with 2 people on each side. But if you're short, you just get kind of bored after a while of taking a chance. And what is that chance? That chance is bogus news. What we now call fake news has been around forever in the stock market, but it is used to great advantage during weeks like this, sometimes during Christmas. Anytime the volume gets light and there are a lot of people short a particular stock, it's not uncommon to start seeing all kinds of, I'm going to call it, just that kind of self-serving news, self-serving upgrades, and out of the blue, fund buybacks. We'll talk about a stock that's doing that and why it is almost never what people think it is. But we're going to have a good time today. We're going to start looking at stocks. But if you're thinking of any big moves happening historically, that is a bad bet on the indexes. It is a good bet, or a better bet, let me put it that way, or a low-risk bet, thinking that maybe one of these stocks out here is going to have a little bit of extra help that maybe isn't so well-intentioned, except for the people that are manipulating the stock. So you can get into those, and we see that effort today. So we'll get into that a bit. What else is happening? I think that's it. Why don't we get through a little bit of history? We've got a lot of good charts to look at. This is a week where spending a lot of time in the charts seems to be very good and well spent that time, especially over this weekend. The reason why is that if the market goes up on light volume, you almost always want to fade it. If it goes down on light volume, you also almost always want to fade it. So the next 3 days are very important to the money that you will make next week. Not very good for the people that are watching 5-minute charts. A little better for people that are looking on the long game for equities. And this market or at least these weeks into 3-day weekends are much more set up for people maybe even trading commodities. They seem to move a little bit more going into these 3-day weekends. So buckle up, Buttercup. It's time to get to some history.
Then it's all just a little bit of history repeating.
Today in 1980, Namco's upcoming game Puckman is released in a movie theater complex in Japan. First time that regular humans get to play the game of Puckman. After a very favorable initial reception over the sand through the summertime, the game is slightly tweaked with the most major change, the renaming of the game to Pac-Man. Midway, Namco's U.S. distributor thought that vandals would alter the letters P to an F. Now, who would have ever thought that miscreants like me in 1980 would ever do anything like that? Nope. I was much more likely to change the letters around on those little boards where you plugged in the letters, like at the front of restaurants where it would say, please wait to be seated, and steal the S, or a handful of other things that were just simpler times back then. Today, of course, everything's printed. You can't change those things as easily. So the youngsters don't know what they're missing. So what else do you know what's going on there? Anyway, Pac-Man was the highest grossing game until, I think, in the late 2010, maybe 2011. It was finally beat, but it did $2.5 billion in all those years. And I guess it's still probably making money in some places. But in this day in 1980, the start of Puckman is happening. Now, while we've got just a few seconds before this break, I wanted to tell you that the best way to make money, if you're just watching stocks, doing what I said in this first segment, is to go out there and check out the front page of TFNN. Go there and find how you can get Tiger Dollars and use those to get either one of my newsletters or the Art of Timing the Trade charts, and apply those Tiger Dollars at a substantial reduced price. It is the easiest way to make money today, and I know you will go there either right now. Maybe you'll go home and flip on a light bulb, or you'll turn on the garbage disposal, or you'll just take that first bite of dinner, and you will think, I'm getting sleepy. But before I get sleepy, I'm going to go over there to the front page of TFNN and buy some Tiger Dollars. You are getting sleepy.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about The Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive The Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on The Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Man, that was Miss Pac-Man, wasn't it? You never know. Anyway, CEO Mark Zuckerberg was getting grilled by the EU ministers. I think it actually ended. I had to hang up just before my show started, but I got to listen to almost all of it. Pretty interesting questions. A lot of questions for guarantees that Facebook and Mark won't be evil. He was doing pretty well until he started lying, and I know he's lying. There was a great question out here by Nigel Farage about whether or not Facebook wants to be or is manipulating, even probably worse than the Russians, free speech on his platform. There were two major lies that I caught that he said. And of course, if you're pushing your own product, maybe you go a little extra. But there's an old theory that I like to use, and that is you go into the same restaurant for breakfast every morning. You get a new waitress, and every day you pay the bill, and she shorts you by $1. Man, this happens 10 times in a row. What do you think about what she's doing? Now, you go into the same restaurant, you get another waitress 10 times in a row. One time you're $1 long, one time you're $1 short. Just kind of random. And the other time, you're always get $1 on your side of the fence. So you kind of know that the first time you're getting robbed. The second time, she's probably an idiot. And the third time, I have no idea why she's giving you an extra $1. But if it happened 10 times in a row, you know something is up. So maybe she just likes you. But that's the problem. He said that he was going to try to make it politically flat, i.e., who gets kicked off his website. The problem is that there are about 100 different people that have been kicked off because not because they're inciting violence, but just because they've got a different political opinion. In fact, it's easier to be on Facebook and advocate cutting people's heads off than it is not having a far left opinion on Facebook. Anyway, there's like Farage gave him about 100 websites that have been kicked off Facebook that haven't advocated anything other than something that doesn't go down the elitist way of politics. He couldn't come up with one that was on the far left that had ever been kicked off. So it I guess, is legal, but the question is, for a business, does it make sense to tick off half of your customers, at least in the United States? Probably a similar amount if you figure Brexit is the same way. I just always suspect that things like this, and somebody in the den was bringing up Google, when you get such a close bunch of people, they call it in politics, at least being the president, in the bubble, where you really don't hear what real people are talking about, and that anybody actually could have an alternate opinion to yours. You're going to force it. I just think it opens up, a lot of these guys are just opening up huge doors where other companies can come in, and they, just like IBM, no one believes that they can be supplanted by some horrible little glasses wearing a nerd in the 80s, like Microsoft. The guy doesn't look very threatening, but they can come in and take your business away from you. I just don't think that if you were running a business and thought of it as a business, you would leave the door open and let the wrong dog come home. You'd want it to be fair. And I think that the people on both on the right and left would want you to be fair and have free speech. But yeah, he's got the problem that, well, there's 100 examples over here, and there's 0 examples over there. So we know that there's a fairly large political bias in what Facebook does. I've never liked it, mostly because it reinforced the worst narcissistic views, especially of our young people. But will that make any change in the price? And the answer is probably no. It's all about whether they can continue to bring in advertiser dollars. Haven't seen a change in that yet. My guess, though, is in the near future, one of these companies, whether it's Facebook or Twitter or Google, is going to feel and find a fairly good competitor to their business, and they will be very shocked that anybody could come back in and take over a fairly entrenched position. But that is the heart of hubris. I got somebody else asking me what else did Facebook lie about. Trying to remember now. There were a bunch of things, but that one struck me just because on the face of all evidence, you know he's lying. There were a couple other things out there that were kind of interesting. I thought that was the one that hit me most, and that would be, I just think if he was thinking of his business first, that he would make sure that all sides got a fair hearing, and we know that they do not. So that was kind of interesting. Anyway, Google on 60 Minutes, question in that. To me, these companies have gotten big, and they have a lot of hubris. They don't believe that anybody else can come in, nor do they believe anybody can actually ever use basically get a law passed or see any kind of antitrust suits against them. I think they are woefully, and history would say woefully, wrong. That has happened more times than not. I would say that some of the big robber barons of steel and rail in the late 1890s to 1920s, Standard Oil. These guys had tremendous power, and were circumvented and run out. So I don't think that it's any different. But anyway, I'm not a big fan of Facebook. Dislike the fact that they're not truthful about the fact that they have a fairly large agenda. But I think a lot of these companies are going to find out that slowly that leaves a big door open to other people coming home. And I always, when I was responsible for my products, I was more interested in making sure that there wasn't some door. In this case, it's not political, or in my cases, it wasn't political. It was just whether or not someone else could find an easy way to get back in. We had 90% of our business of the market wanted to keep it. I think that they should do the same thing. Anyway, we'll be back after this.
The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked, money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find The Path of Least Resistance under Trading Newsletters. Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Direction's daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
As we were talking in the first segment, talking a little bit about share buybacks and other things happening in very light volume coming this week. Micron, kind of interesting. We'll talk about it compared to Boeing for a second. But of course, they're talking about a huge share buyback for Micron. And that really kind of popped the stock today. Volume's pretty good. Could it get 63.42? Certainly could. So the question is, how do these share buybacks actually affect stocks? Well, one of the things you should know is less than 10% of whatever the number that they put out there. In the case of Micron, I think it's 10 billion, maybe 1 billion historically of that would actually be used. A lot of times it's actually less. The only company that actually even bought anything close to it was 21% over the last 10 years for Boeing. They are actually the biggest buybacks, at least as percentage of what they say they're going to buy back, of any company out there. And I think that was kind of interesting that it is 1/5 of what they stated is what they bought back. Apple, of course, their big share buyback, the exact same thing. They'll announce these, and what are they? They're either temporary things to run the shorts out of the market, and a not so subtle threat that if you get and start piling on my stock, that I'm going to feed you a very painful, slow beating on the way back up as I buy my shares. There's got to be something really horrible happening, and that's why it's probably a fairly poor bet to be shorting companies that have huge amounts of cash on the side. A better bet, and what most professional shorters go after, are stocks like Tesla, ones that are eating money, ones that are burning money. This opened up higher today, around 290. It's gone lower. They got a fairly bad rating on Consumer Reports today. Volume hasn't really picked up that much. This is a week with even bad news doesn't tend to get the kind of volume that you would think. This is actually going back into this heavy volume update from April 4th. Came up on 20 million shares. Today, so far, down on 7 million shares. So if you just divorce this from volume, you'll find that this is not maybe as bearish as you would think. My thoughts are that you still could get a fairly decent bounce in Tesla. What you need to do is see that this almost perpetual 30% short interest in Tesla goes away. We haven't gotten that quite yet. So, again, the old saying, be wary a quiet market. Even if you're right, you're probably not going to be right as much as you wanted to be in heavily shorted stocks. Still made more money than you would have probably in the rest of the market, but it is problematic. In thin markets, you also have issues that you wouldn't always think about. And that is, let's take a look at some earnings. AutoZone's huge swing out here seemed to come out from nowhere. They basically took it right up to the gap. This gap happened down at 1872. I saw this trading, looked away for a second, and boom, it was gone. I mean, you would have had to been almost perfect to have this thing hit $710 today against this down day on February 27th, where the high was 710.59. If you want to know how machines run stocks, this is a textbook case. Now down to what are we at? 607. But man, can they make a stock whistle with light volume. Now, I think during the conference call, some people kind of just, after the market was going, made a comment. And this thing got whacked. I haven't had enough time to dig back into it. 590.79 is that April 20th low. But this is one of these things where, again, if you get a stock moving, either the upside or the downside, you can have wild swings with almost no volume in this market. In fact, we're not going to you're probably going to come close to this down day on the 27th of February that had 1.8 million shares. what do we have already? 1.3 million shares. So you're not really coming down with heavy volume, but there aren't a lot of people willing to stand in and stand in front of a steamroller coming at you. Watch this thing probably next Monday or Tuesday for a bounce. If you get everybody washed out of this one this week, there's not a lot of volume. A lot of times these things can have a $1 or 2 day bounce, especially as when we come back, it's going to be all about fun buying. When we come back next week, I will be gone, by the way, tomorrow and come back next Wednesday. So I won't be back next Tuesday. I will be back next Wednesday. And all the newsletters, everything else will continue as usual. The only difference will be I will be paying a lot of money for a worldwide web service that works actually on the world stage. No matter where I'm at, I will be able to get my quotes and send out newsletters. So anyway, you basically get into fun buying, which is Wednesday next week, Thursday, and then that Friday. So you personally have kind of a little bit of a bounce into those 3 or 4 days next week. If we continue up on very light volume and these stocks just kind of hang at highs through next week, one of the best setups you can have to eventually short the market. If we actually start going down lower this week, then I would be more interested in saying that we have a good move higher next week. So a lot of times this is the best to sit back and either be in highly shorted stocks that have the ability to do what Micron did today, or just kind of lay back, enjoy the world, get your head clean, and ready to come back on the 29th. You can give me a call at 877-927-6648. You can email me at path@tfnn.com. And, of course, you can always post a message in the den. What else? Oh, wanted to look at a bunch of other stocks today. Had a lot of them giving signals. AAP, which is Advanced Auto Parts, not quite the same kind of candle, but pretty good in this auto parts business. Talk about dark cloud cover. This is the poster child for this in candlestick charting. Wide price range, volume has picked up on this one, much better look than the other one had. ABBV, which is a BV. We'll get to this. We'll talk about these stocks that are kind of setting up. We want to be watching early next week as these things come in to the point where, these things could have nice big ABCs. We'll talk about this one when we come back.
The TFNN Memorial Day Tiger Dollar Special has just been announced. For 1 week only, we're doubling the bonuses that we normally give out with any Tiger Dollar purchase. Normally, when you purchase Tiger Dollars, you can receive a 10, 15, or 20% bonus with your purchase, but through Memorial Day only, we've doubled the bonuses to 20, 30, and even 40%. This is one of the best Tiger Dollar sales that we offer, and they only come around a couple times a year, so don't let it pass you by. Tiger Dollars can be used for any TFNN newsletter or service, and they never expire. So whether you're already a subscriber and want to add savings to your monthly or yearly subscription, or you're thinking about signing up for anything in the future, now is a great time to get your Tiger Dollars. For all the details on the Memorial Day Tiger Dollar Special, visit the front page of TFNN.com before this deal ends May 28th.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
As we said, we're going to get to BV in a second. Tomorrow morning, before the bell, we've got Target, Lowe's, Tiffany's, Ralph Lauren. That's kind of the big ones. Anything else out here? No, a couple of IPOs that haven't been out that long. Yeah, that's about it. But anyway, pretty big morning. Tomorrow night after the bell, we've got Intap and L Brands. Copart, Sonoma, Williams Sonoma, Synopsys, SQM, which is the lithium mines in Chile. That thing has been all over the place. Let's see if there's anything else going on Thursday. Best Buy. You know, any kind of weakness in Apple probably going to affect them a lot. But, we'll take a look at that chart too. You don't have a lot, but I think that would be an interesting. After the bell on Thursday, we've got Autodesk, Ross Stores, Splunk, Gap, and Decker's Outdoors. So handful of things. Nothing, Autodesk probably the strongest of the bunch. Maybe Lowe's, but I think everybody's kind of already thinking a little low on Lowe's. So Autodesk after the bell on Thursday. So you're going to have a little bit of action, a little bit of pushing on the market. But Autodesk, I think, has kind of been coming in close the last few earnings statements. Anyway, we're talking about a lot of these stocks that are setting up for potential short positions. I love to see these things fill half of the gap that is left before I pull the trigger. In the case of this one, it came down on March 22nd with 27 million shares, and we're back up into it yesterday with 5.8 million shares today. Got about that same so far. So coming in with extremely light volume into these giant gaps down, this would take you about halfway in, would take you to about 110. You got to 107.25 yesterday. So you don't have that far to go, $3-4 higher in the next few days, maybe early next week. Maybe this thing gets to 114 and totally fills this gap. As long as volume remains light, you've got a nice setup. This could take you back down to $75. Actually, the ABC, if the high is in, takes you to 73.47. But I'm thinking you get a couple bucks higher, could get you down to about $75, and that's a nice, just one-to-one giant ABC on the way down on this one. ABBV is the signal on it. So far, looking fairly good for a short position. Other ones out here is Alaska Air Group. Now, this one's making a low against previous lows on lighter volume. Would have liked to seen the energy off this April 23rd high come back on a little lighter volume. 57.60 was the April 3rd low with 4.1 million shares. Got into it with 2 million shares yesterday. I suspect that we're very close to some kind of highs in let me get back to this in crude. Now, maybe I don't think it happens this week. I think we're holding up, but my guess is that we could come back Tuesday or Wednesday and start seeing some fairly decent highs in this one. I thought it would happen this week. We didn't get the additional rigs that we needed in the Baker Hughes numbers, I think, to let people know that the supply was really starting to come on. Still have problems with Venezuela. Any kind of correction there would be interesting, and them actually getting crude back on the market. Don't know if that's going to happen after the messed up elections that they had, I think, on Sunday. May not be anything, but there are a handful of these stocks. Anyway, certainly it is tested its previous low on lighter volume, and it's back into the trading range. Fairly narrow risk reward out here. I just suspect that it's more about next week than this week. On the plus side, if you're looking for ABCs to that upside, Sienna has a nice setup. I'd love to see this one come into about 24 bucks. This $24 level would fill a gap that goes back, that's still unfilled from August 31st of 2017, where this thing came down on 27 million shares. So that's going to be that support area. You also have that as a double gap because it gapped up on March 6th with 17.8 million shares. Yesterday you were down into it with 2 million shares. Today you're down into it with, is that already 2 million? Oh, actually 4 million shares yesterday, 2 million shares today. So you're getting on light volume. But you want to keep an eye on this one. If we do get into a bullish move after the 3-day weekend, that mid 24, so $24.25 looks awful sweet out here on light volume if you wanted to go long Sienna. Costco, there's some of these stocks making highs out here. So let's take a look at this. Certainly Costco has been hitting these highs. I think it's got earnings next week. January 29th, it hit 199.38 with 3.5 million shares. The highest volume we've had in the last few days as it's pierced that has been 2 million shares. So you're basically almost half that previous high. You don't have a lot of juice. The energy off this February 9th low up to this high today also has been rather weak compared to the move down off that January 29th high. There's a lot of them out here. IWN as in Nancy, which is the Russell 2000 Value Index ETF, testing the 131.46 high of January 24th. That had 1.77 million shares. Today we've got 1 million shares. Yesterday we had 980,000 shares. So we're going to watch this kind of interestingly to see if there's light volume breaking of the IWN, not IWM as in man, but IWN as in Nancy, the value index in the Russell. To Juniper. Another one of these stocks that probably wouldn't short because it's not expensive enough, but does look like you're probably getting fairly close to everything you would want out of this bounce off of 2361 in these semis. And again, there's how many more companies out there can announce billion-dollar buyouts? I think most of them have done it. Not all of them. Gap down on earnings on the 31st of January, did so on 16.2 million shares. Yesterday you had 4 million shares. Today you got a little under 4 million shares so far. You had a day where they kind of tried to push this thing up on the 2nd of May, and just still hasn't done that much. But like I said, a lot of these stocks are lining up with very tough resistance, just a little higher when we're looking at that. Packaging Company of America is another one to watch. The reason why I like this one so much is it tends to lead the market very well. If you're making a lot of things in the United States, you need packaging. The last high on this one was 800,000 shares on February 27th, 122.18. We're spiking that today to 500,000 shares. It might get to that level. You're still talking about down days of 1.2 million shares. Gonna be kind of tough sledding from here on. Got a few more to look at.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
One of the keys to success in anything is the ability to make new distinctions. So what new distinctions are you making to achieve even more success in your life? When it comes to trading and investing, I wanted to become the best of the best, which is why I went on to make new distinctions. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest have been tracking my newsletter signals, which have earned me the ranking as the #1 market timer in the nation for the S&P 500 in gold. On Wednesday, May 23rd at 5 p.m., I'm going to share with subscribers one of my newest distinctions, which is how to follow the money and do so with multiple currencies. You see, money has to flow somewhere, and with the world getting smaller and smaller each day, you and I can identify exactly where most of the money in the world is flowing. Sign up for Mastering Probability by coming to the homepage of TFNN.com to begin your 30-day money-back guarantee trial membership and learn the exact tools that I use to time the markets. And if you can't attend live, don't worry, because the workshop will be archived on your members page for the next 30 days. Sign up today.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. XLE, I wanted to get to this one before the end of the show. And we are testing the previous highs. That's the January 24th, $78.39, 20 million shares. Now, we've got into that. We've got about 8.6 million shares so far. We got into it with 16 million shares. That was back on to the 17th. So you're close. You haven't gone through that through the high. What you have that makes me a little nervous and make me think that maybe we've hit some high is just the energy. It's been a long road off that February 9th low at 35.10 in the XLE, or excuse me, 64.45. I know a lot of people probably screaming. It had 35 million shares. That's been a fairly untested low. you kind of got into it, but I wouldn't say that you busted it, which you'd like to see on this day on April 2nd. Anyway, the energy up here. Could we be in just a massive trading range with crude? I think the answer is probably yes. There's plenty of supply. Few reasons why we've seen that supply dwindle, but I'm not a fan of the idea that we've seen peak oil. I've been to that rodeo before. Energy's not that bad. Are there probably better shorts out there now after that day? It could be. I just don't suspect that there's a lot more on that other side. Maybe if you get a spike, that'd be interesting. My guess is that this does come back down to 75 with this last gap happened. I will be back a week from tomorrow, so I'll be on vacation. All the newsletters, everything else continues as normal. Nothing changes. Check out those Tiger dollars. I won't be here to remind you anymore, but you need to go to the front page of TFNN and check them out. Remember, Tiger dollars. In the meantime, sell when you can, not when you have to. I will see you here. Same bat channel, same bat time, Wednesday next week.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.